Hello everyone, I hope that we're doing well. So this video is a continuation of the video on income statement. So in the first video, we had prepared the income statement. In this video, we'll be preparing the statement of financial position. Please, if you haven't watched the first video, please pause this one and watch that because we'll be using the net profit figure from the income statement that we prepared. Okay, so let's get started. We'll begin with our non-current assets. So let's get what are the non-current assets we have in this trial balance. No, not a non-current, no. So all of the yellow, highlighted ones were the figures we used in our income statement, just to make it clear to us. So what are the non-current assets? Okay, so this is a non-current asset. So we have this as a non-current asset, plants and machinery, plants and equipment. So that's a non-current asset, and that is 5,000. So we'll pick that 5,000. And we're going to just highlight it to show that, we have picked that. So plants and equipment is a non-current asset. Maybe this time around we highlight green. Okay, what other non-current assets do we have? No. So in this trial balance, this is the only non-current assets that we have been given. So the total of non-current assets that we have is 5,000. So we'll pick that. That is 5,000. What about current assets? Current assets, I'm just going to take away this. What about current assets? What are the current assets that will be, given? Let's see. No, that's not purchases. No, that's not already. Trade receivables. So we have here trade receivables as a current asset. If you haven't watched the video on accounting terms explaining each of these key things, please refer to that video. So here are the trade receivables. So the amount that our customers are owing us is 6,800. We're just going to highlight just to show us that, we have worked on that. Trade payables is a liability. So bank balance. So we have bank balance. So our bank balance, usually we just write bank. So we have 15,100. 15,100. We're going to highlight this just to show that has been treated as well. We have cash. So cash as well is a current asset. And our cash element is 200. 200. 200. Do we have any other current assets? No. No. So of the remaining items here, we don't have more current assets. So what we need to do is we need to add up all of these current assets that we've been given. So bring in our calculator. So the 10,550 was what we got as our net profit. We'll be using that in this calculation. So we have 6,800. We add 15,100. And we add 200. So here our current assets is 22,100. So 22,100. So 22. 22,000. We add that to our non-current assets. So we add 5,000, which is our non-current asset. That's 27,100, and that is our total assets. But just to be sure, did we miss anything? Let's check again. Drawings, capital, no. Drawings, no. General expense, sales, purchases, trade receivables, trade payables, bank balance, cash. We've taken cash. Plants and equipment, we've taken that. Heating, oh, we have something we haven't taken, and that's our inventory. So we need to be very careful to ensure that when we pick everything, we haven't, taken our inventory. So our closing inventory would usually include our closing inventory in our current assets. Closing inventory in our current assets. So our closing inventory is 5,450. So if we had not put that, our calculations would have been wrong. So please, let's take note of that. So it means that our current asset figure would change. So we'll have to do that again. So we have 5,450. We add 200. we add 15,100, and we add 6,800. And that gives us 27,550. Okay, now this becomes 27,550. So now we add that to our current assets of 5,000, 32,550. Now that looks more like it, 32,550. So I hope that is clear. If we look at it again, we have all our the elements of the transaction included in the current and non-current assets. So this, we're going to put it now as green. We had used it initially, in preparing the income statement when we're looking for our cost of sales. Okay, so we have our total assets. Now we go back, we will go to the capital and liability aspects of it. So if you haven't watched, the recording on accounting equation, please watch that recording. So here's the capital and liabilities aspect of it. So the capital, we go to our capital. Capital is 20,000. Capital 20,000. We're going to add profits to our capital. We have said, things that increase our contribution, our ownership in the business is retained earnings. So adding back profit into the business, and what can reduce, our capital ownership in the business is losses or drawings out of the business. So if we had made a loss in our income statement, we would have less the loss. But because we've made profit, we're adding the profit. So we're going to add profits. And the profit figure we had was 10,550, what we saw in the calculator the other time. So 10,550. This is what we have taken away from our net our income statement. So you see that you need to prepare your income statement to be able to get either your net profit or loss before you go into your statement of financial position. Well, unless you have been given the figure in the question. Okay, so we're going to add that. Is there any drawings? Yes, we have drawings, and drawings reduces your ownership in the business. So with less drawings, and we've been told that the drawings is 7,000. So we need to also highlight this to show that, we're taking everything, we're taking drawings now. And then doing this helps us to recognize when we miss a figure. So drawings is 7,000. So we're going to So we're putting it in brackets just to show that, we're subtracting that amount. So we're going to then bring up our calculator now. So we have 20,000. We add 10,550, which is our net profit figure. We have 30,550. We take away 7,000. And that gives us 23,550. So we're going to write here then 23,000. So our capital at the moment is 23,550. So this is our capital figure now. We go to our current liabilities. Non-current liabilities. So we've gotten capital. So we need our non-current liabilities and the current liabilities. Non-current liabilities, do we have any non-current liabilities? No. No, the only thing we have here is trade payables, and trade payables is a current liability. So we'll pick trade payables and bring it here to current liabilities. And that amount is 9,000. We don't have anything as non-current liability. So that's done. So we're taking 9,000 here. We're adding that to our capital. If you remember what we had said, that, our capital plus liabilities, assets is equals to capital plus liabilities. Your assets, the total assets you have in the business is a combination of your owner's contribution in the business and liabilities to external parties. Your obligation. So this is 9,000. So we're going to add 9,000, which is our current liabilities. We're going to add that to 23,000. Oops, okay, that was 23,000, 23,550. So we add 9,000 to that. They should be equal. And that's 32,550. So yes, your asset is equals to your capital plus liability. So if this amount wasn't equal to this amount, we'd know that something is wrong somewhere. So we've taken away this payables figure, so we need to highlight that. So you see down that your capital and liabilities is 32,550. It is also equal to 32,550 of your total assets within the business, which is what the accounting equation is saying. So this is the end of we preparing, the statement of financial position. This is, of course, a very simple question. In the next videos, we'll see more technical questions to solve. I'll see you then.